All right. Looks like we're rolling. What is going on, everybody? I am sorry for the hiatus, but I got a double upload coming at you really quickly here this evening. If you do not live under a rock, I know you've probably already seen a lot of the news come out this weekend for money moves that Trump is making, the largest of which, in my opinion, is this news right here. So, Trump is wanting to normalize a 50-year mortgage for home buyers to make housing more affordable for the average everyday person. Okay, so for those of you who are unfamiliar with mortgages, you're unfamiliar with the real estate market, the shortest, simplest, easiest way I can describe it: your mortgage payment is what you're coming out of pocket every single month to pay down the interest and the principal for your property, and obviously your taxes and insurance as well are factored into that lump sum. For people who are purely concerned about a cash flow, right, like whether or not they can afford their payment, right, they think that this is a great deal. And one of the things you have to really understand is that when something sounds like it's good, something sounds like it's to your benefit, you really, really have to pay attention to the fine print. Like, this is a classic example of how, I hate to use such an incendiary term, but I mean, it's the truth, like how slavery in the modern era works. Back in the day, it used to be, whips and chains, and now it looks like a rose, right? It looks like a blank check. It looks like everything you've ever wanted it to be, and you're excited to sign on the dotted line, right? And that's the most sinister part of this financial chicanery. And I just want to give you an example and explain why. Because if you've never had a mortgage, or you've never you're not well versed in finance, you're not going to understand why this is significant and why this is going to hurt people in the long run. This is an example from a tweet. All this stuff that I have screenshotted up here is all pulled from Twitter. I'm going to read it out to you in case you're listening to this while you're driving, or you can't look at your phone. First thing, I want to make sure you guys understand this tweet says, and it is accurate: yes, the 50-year loan costs more for the home buyer in the end than a traditional 30-year mortgage. Okay, so traditionally, like nowadays, you see people that have mortgages are usually 15 or 30-year mortgages. There's obviously, you can structure your mortgage a billion different ways with balloon payments and having it be like a 2-year mortgage, but we're not talking about that. Just traditional, you're a 38-year-old couple, you want to start a family, you go buy a house, you're getting a 30-year mortgage, right? Fixed rate. And so this is an example here, right? So for a $400,000 home at 6% interest, remember, I've been talking about in previous videos, the average home is about 400 and actually like 426,000, I think it was. Fact check me on that, but I know it's definitely over 400,000, give or take a couple of banderinos. So for a $400,000 home at 6% interest, a 30-year loan means that you're going to pay about $463,000 in interest. $463,000, that's almost $500,000 worth of interest. You're actually paying the entire value of the home when you bought it, plus an extra $63,000, right? So that's a pretty significant amount of interest. But if we were to extend that time horizon from 30 years to 50 years, y'all, you're paying $863,000 in interest on a $400,000 home. That's, like this tweet says, that's nearly double the interest, even though monthly payments are lower. For a 30-year mortgage, you pay about $2,100. For a 30-year mortgage, you would be paying $2,400 versus for a 50-year mortgage, you would pay $2,100. So you're really only saving about $300. But the longer the term is on your mortgage, the more time the interest has to add up. And that's the biggest thing. This is less of a handout for the people and more of a handout for banks and lenders, right? So everybody who's in the lending business right now is probably rubbing their hands like Birdman, because they understand, oh my God, we just pivot out that time horizon and they save $300 and we quite literally make double on our interest. So you're going to see that there will be families who will take out a mortgage, right? Like I said, that proverbial 38-year-old, and they're going to be paying on that until they're 88 years old. I don't even think the average American lives into their 80s. I think the average American lives into like their mid to late 70s. So this is a really difficult thing, right? And how many people do you really believe? Because this is really going to target people who are in the middle class. How many of them do you really think are properly structuring their home and making it so that when they pass away, it doesn't just simply go to probate and their children are, left up the creek without a paddle, and the home that they grew up in just winds up in some private equity company, some large institutions, basket of mortgages that they're, packaging up and making a little spread on the yield, right? It's the writing is on the wall. So as much as middle class families are, or who aren't well versed in finance, are cheering for this, I want you to understand this is not good news. $300 is hardly even going to cover, like, realistically, $300 isn't going to make a big difference for the majority of people. Like, I talk on this channel about saving your first $1,000. Yes, $300 a month is going to be great, but in reality, a lot of the people who really need that extra $300, they're not even looking for a mortgage in the first place. They're renting, and they're just trying to make sure that their rent doesn't, jump up too high, and they're moving out to the outskirts of the cities and things like that. So all that to say, please, please, please be mindful when you're signing these documents, when you're looking at all of this information that's coming out and they're saying, oh, this is so good for you. This is going to be fantastic. You're going to save some money. Understand that it comes with extreme strings attached, and that most likely, if there's something that's supposed to benefit you as the average, I hate to say this, but middle class schmuck, there's probably something on the back end that's really going to sweeten the deal for the wealthy people who are facilitating these loans. And just don't get caught. You know what I'm saying? And I've seen some people on Twitter as well who were like, oh my God, this is fantastic, and let me tell you why. And they're like, well, if you take that $300 and you put it into Bitcoin over the lifetime of that mortgage, you're going to make, millions and millions of dollars investing $300 a month into Bitcoin. And while that may be true, that you're going to make lots and lots of money investing over the course of 50 years, $300 every single month into Bitcoin, you're better served any other kind of way. Don't put yourself in a situation, or your family in a situation, where you can potentially be underwater hundreds of thousands of dollars. You're paying up an institution all of this extra money. The time value of money is actually really important. And you would be better served just going somewhere, renting, and staying within your means, and taking, maybe instead of it being just $300 that you're saving something like $500 or $600. Like, don't get caught up in the minutia. A lot of people always want to try to talk about, oh, you need to own a home. You need to own a home. That's ownership. That's ownership. Listen to me. If it can be taxed and it can be taken away from you all because you didn't pay your taxes on time, or because your lawn isn't cut the way that it's supposed to be, or whatever, you have to keep payments going and it's taking money out of your pocket every single month, that's not something that you own. That's not an asset, right? People talk about, oh, the land, oh, the house, all these things. That is not a true freedom, a true asset that you can actually hold on to, and that's going to be yours forever, no matter what, once you purchase it. All it takes is the economy to, take a downswing, and the business that you started goes, cuts down by 60%, 50%. Hell, some people, their margins are razor thin, 20%. And all of a sudden you can't pay that mortgage for a few months in a row. They will come and drag you out of that. They will bring the constable to your door, give you a pink sheet, and you will get dragged out of that home. Do you understand what I'm saying? Like, this is not ownership. So please do not allow these people who, are giving you advice that might have worked 3 decades ago, telling you that, the game is still the same. It's not. They're just trying to pivot out the time horizon so that way you can feel more comfortable with taking on debt. But what this is really doing is this multi-generational debt slavery. So I just wanted to make sure that you guys are aware that, everything that glitters is not gold. And that while, yes, this is going to decrease the monthly payments for some people who choose to take them on, the vast majority of shrewd investors, the vast majority of people who are, wisely investing in real estate, they're not, this isn't something that they're necessarily giddy on taking on. You know what I'm saying? You can spin it how you want to, and you can say, well, it works this way. You could put your money into VOO, or you could put your money into Bitcoin. But I'm just letting you know right now that at the end of the day, you're going to be better served just rocking with renting and putting that extra spread that's more than $300 into your Bitcoin stack, or at least that's what I would do, and that's what I'm going to do. I'm interested in a 50-year loan the same way I'm interested in having a hysterectomy in my 20s. Like it's not something I'm chomping at the bit to get. So don't want to make this video super long. Just thought it would be something interesting to talk about today. And I could do another 40 minutes of talking about the fact that Trump and FDR are side by side in this photo. And if you know history, then you know, right? But just keep your eyes on the prize. Do not let these distractions stop you from stacking. We got a mission that we're trying to accomplish here, and a 50-year mortgage is not a part of the plan. So, Pulte GFY, it's usury. It's 50 years of usury, and I will never co-sign by that. And I think that if you are middle class, and I know you've wanted to buy a home, you are better served having hard assets and being able to borrow against your own stack and being your own bank, because this, 2,000 years ago, there would have been bankers hung and quartered for it. So with that, I have said my piece. There is nothing more that I feel like I need to discuss. If you like the video, drop a like. If you disagree with me, leave a comment. I'm right, so it'll be fun eviscerating you in the comments. But with that, I hope you guys have a fantastic evening, and we'll get back to it bright and early in the morning. You should see another upload here in just a moment. I'm going to talk about the stimulus checks. So with that, I will let you guys go. Have a good one. Peace out.